There's clearly a race to become as self-sufficient as possible.
You have this contrast between digital, where the fight is still on, and maybe green, renewable energy generation, where China has perhaps won that race.
They're still tackling structural issues, in my opinion, with cyclical policies.
Gen Z protests spreading across Southeast Asia, these are not people who are unaware of what the world is like and what they should be expecting from it.
Welcome everybody to another edition of What's Brewing with Matt and Guy. Matt, thanks for joining again. As always, a lot to talk about right now. But what's kind of front and center for you? What's keeping you up? What is the exciting prospects from your perspective?
Nothing keeps me up, Guy. I sleep like a baby. But I think one interesting development over the last week or so has been potential thawing in one point of friction between US and China. It looks like there may be a deal on ownership of TikTok going forward, which is obviously going to be a relief for you with your TikTok habit.
Absolutely. But is TikTok something you subscribe to?
Religiously. I'm a big consumer of the Money Mindset podcast from Zurich, which your colleague Ross is very good.
Also available on YouTube to all our viewers, but indeed, that's something to look for TikTok. But you think this is quite a profound deal that's been struck?
I don't know that the deal itself is profound, but I think what it indicates is the willingness of the US administration and the Chinese government to continue talking and come to pragmatic compromises where it's needed. But I mean, what do you think? What are you seeing from a market perspective? Is this taken as a sort of positive? Should we all be putting more money into our tech stocks as a result?
Well, I mean, you said pragmatic compromise, and I think this is exactly what it is. I think one of the things that's happened since the start of the year, all the talk about tariffs, is that there is this clearly symbiotic relationship between China and the United States. Whether it's trade, whether it's technology, everything is intertwined. You just can't have a divorce, Matt, like that. And that, I think, is what we're realizing, that were we to have a really hard break, there's going to be a lot of collateral damage that would impact not only China, but the US as well. So whether it's around TikTok or whether it's around access to chips, all of these things, I think, is something that is now being worked through. If you think about NVIDIA as well, we had on one point, they were getting access to the Chinese market to share revenue with the US government. And the next minute, of course, then China is saying, well, we're banning chips coming in from NVIDIA. So there's a lot of noise around here. But below the noise, I think there is a pragmatism that's coming through where they realize they still have to work together. But there's clearly a race to become as self-sufficient as possible, particularly around technology. And that's why, if you look at these technology companies globally, they're doing so well, because there's so much R&D being invested, both by the Chinese and by the Americans.
So we have a sort of arms race in the tech space, certainly around AI, but it's one that's not seeing China and the US sort of build significant barriers between the two countries at the moment. There's still flows of trade, and the economics is trumping the politics, if you like.
But as you say, it is an arms race, so that they're both out to try and make as quick breakthroughs as they can, whether it's AI or technology generally. And that, in many ways, is not a bad thing, because ultimately, I think the consumers and businesses will benefit from all those breakthroughs. But here's a challenge. While they're doing that, on the one hand, China are recalling skilled workers from other parts of the world to come and get that energy within the tech space. And when I look at the United States, I mean, they're introducing $100,000 for entry for tech-savvy people coming into the country. Now, for me, the US was always the place that everybody wanted to go and work. If you were smart, if you knew about technology, that was where you wanted to be.
You're the economist, Guy. I mean, surely if everybody wants to be there, you can charge money and people will still come. I mean, isn't that the bet from the US side?
I think there's an element to that. But the question right now is this the right time to be doing this? And it seems, when you look at these visas, that I think it's India is about 70% of the visas. Is this a political element? Because, of course, we know that the US and India, in terms of the tariff situation, there's still quite a lot of friction there. Is this about economics, or is this about politics in terms of this visa development?
Look, if you ask me, my view is this is really a reflection of some of the inherent contradictions in the policy platform that the current US administration are pursuing.
Yeah.
Very clear that they were elected on the basis of, strong border controls, clamping down on immigration, and we're seeing that play out. And one aspect of that is making sure that you've got sort of a proper filter on the demand for visas and how many people that you're bringing in, even if they are highly skilled. Maybe it is also helpful at this point in time to turn up the heat a little bit and maybe encourage Modi back to the negotiating table? Possibly. I mean,
Let's
I
see.
think
But-
with the
but-
current
But
administration.
to your point about the economics, it's probably going to be US companies that are going to be paying this to attract that talent coming in at a time where that's going to be impacting their margins in this arms race. So we have to kind of see how this develops, or whether this is just another example of either a threat or a tool for leverage to see how this plays out. But one thing, while we're on the politics side, I want to just change track a little bit, is we've just had the speech by the US president at the United Nations. A lot was spent on energy. What's your take on that? Because when I listened to it yesterday, it seemed that there was almost a giving up in terms of the renewable side. It's about drill, baby, drill. It's about oil. It's about gas. How does that play out to what we're thinking about the US over the next 10, 15 years in terms of energy use?
10, 15 years. I
Well,
mean, I don't,
15
I
days
don't-
maybe.
yeah, give me a chance here.
Yeah.
So look, I think it was interesting how blunt and direct President Trump was in that speech.
wasn't he?
on,
Even more so
on
than usual,
saying,
yeah.
you know, you're crazy if you're putting bets on renewables. And I think in contrast to the kind of pragmatism that leads to coexistence at the moment on, you know, chip value chains and continued flow of trade in technology between China and the US. When you look at the green tech space, that I think the US is essentially saying they're not competing there anymore. Now, whether that's ideologically driven or whether it's just a pragmatic realization that you're not going to be able to make up the ground that's been lost over the last decade, 15 years, as China has pumped subsidies into its solar manufacturing and EV sectors, and now has an enormous lead in terms of, you know, manufacturing capability and efficiency. So if you're the US, you know, how do you play catch up on that? What you do have in abundance is traditional energy sources or fossil fuels to you and me, and so it makes sense to promote and push those towards your allies. Not sure how effective that approach is going to be. I think certainly if you're emerging market economy, you look at the availability of cheap solar energy generating sources from China, that's going to be very tempting. And if you're Europe, the drive towards electrification and renewable energy is one that's tied very closely to long-term security and strategic autonomy. It isn't a sort of, you know, dreamt up overnight, I fancy a wind farm. It's something much more fundamental to the future of Europe. So I'm not sure the sort of sound and fury from that UNGA speech will go very far, but it is interesting. You have this contrast between digital, where the fight is still on, and maybe green renewable energy generation, where China has perhaps won that race.
You mentioned about the subsidies, and it's absolutely true that China has kind of dominated that renewable space by supporting these businesses. A lot of them have been uneconomic, though, and it's interesting. Since we last spoke, President Xi in China is now speaking about a concept that's new to me, anti-involution, effectively saying that they're no longer going to be subsidizing very unprofitable businesses, or certainly businesses.
Crazy idea.
It's crazy. Yeah.
Might just work, yeah.
But an idea that they're not going to be, or they certainly don't want to be dumping goods on the market. These companies have to be profitable. So it may well be we see a shift over time in terms of the cost of
Do you think that is that driven by the sort of internal economic pressures, fiscal pressures for the Chinese government, or is that a function of them reacting to the external sort of tariff reality, the fact that, you know, for instance, Europe is not going to tolerate dumping of Chinese goods over the long run?
I think it's both. I mean, if you look at that part of things, we know with the US tariffs being as high as they are, what we've seen in the latest data is that exports to the US have plunged. But actually, if you look at aggregate Chinese exports, they're still rising at quite a healthy clip. And that shows you that they're selling these goods to other parts of the world. So they're still doing well on the export side.
And that's sub-Saharan Africa, but also closer to home in
Southeast Asia. But one thing that you mentioned about is the domestic economy. It's still struggling, frankly. They're still tackling structural issues, in my opinion, with cyclical policies. So we've seen the housing market actually continue to deteriorate, believe it or not. It's been in the doldrums for so long. Prices are continuing to fall, but we're also seeing in terms of domestic consumption, that's also suffering. So I think China's got this challenge about trying to bolster its own economy, but also still using exports in a way to keep that growth dynamic going.
So what does that mean for China's neighbors? I mean, if you are a manufacturing hub in Southeast Asia Asia, you're facing headwinds in terms of your export markets in the US. Does that mean there's no opportunity to replace that in China? Is ASEAN going to have to look at sort of intra-ASEAN trade absent China in order to keep growth rates going?
So again, sorry, two parts to that. I think one is yes, meaning that I think the region as a whole, we're going to see many more bilateral deals struck. I think that's a good thing. I mean, when you speak about the death of globalization, as you know, I don't believe in that. I think we're going to get a lot of bilateral deals coming in that region and globally as well. But I also think there's a lot of exposure and interconnectedness to China. It's not just the US and China that are interconnected, but clearly China has been a massive hub for the region. And there are a lot of companies and there are a lot of businesses that are exposed to China. I don't really think that changes. So what happens in China does also matter for that region. And it is important, again, that China continues to develop, continues to grow, but continues to grow, I think, profitably. That's going to be a key going forward.
And here you have a bit of a contradiction again, don't you? In that if you are the Philippines, you've got continued points of friction around the Spratly Shoals and the Chinese aggression in what should be international waters, or which the Chinese would maintain a part of their coastal waters. You've got the ongoing tensions around Taiwan, and clearly concerning to Japan, South Korea, and North Korea is a threat to North Asia, if not beyond. So you have these points of tension on the sort of military side. But alongside that, economically, an interdependence, which means everybody has to continue to get along a bit. And this is a very difficult political circle to square, I think. It's not just US, China that creates this sort of political tension, but it's
I mean, you mentioned obviously the big, political, but geopolitical events. I mean, there's also political events in this region. I mean, I can say from an economic perspective, well, look at the weak dollar. That's allowing a lot of the region to be cutting interest rates. Inflation in that region, for the reasons we mentioned about lower goods prices coming from China. You would think that's good. Lower inflation, lower interest rates, happy days. But we're seeing political frictions in many parts of that region.
Well, you're seeing Gen Z protests spreading across Southeast Asia. I mean, we saw the dramatic events in Nepal, but more recently Indonesia and Philippines over the past week. And here you're looking at, the challenges of good governance, of eliminating corruption, but most importantly, providing access to good jobs for a young and digitally connected population. These are not people who are unaware of what the world is like and what they should be expecting from it. So, Guy, lots to talk about, lots going on. But maybe I can ask you the same question you asked me at the start of this podcast. Not 15 years hence, but over the next 3-4 months, what are the key issues that you see? What should be keeping us awake at night, even if it's not at the moment?
Well, I think a few months is more than enough to challenge us. Certainly from my side, I think we're looking at rulings around Section 232, around tariffs. I think there's going to be a lot of questions around won't we get the tariffs on drugs and semiconductors. I mean, this is really important, particularly for a country like Switzerland, of course, which is a major drug exporter. Another one for me is actually around the Supreme Court ruling on whether a sitting Fed chair can be fired, as President Trump has tried to do. That's going to be important for the concept about independent central banks and how we see that. So a number of things from an economic perspective.
So you're still clinging to the old independent central bank dream, are you?
I know.
I still think that ship may have sailed, Guy.
Robust institutions and all the like. But actually, I think it's absolutely very important. Has that ship sailed or not? Because this is going to be critical, because financial markets, the bond market, that will have an impact on pricing.
So I think that's really interesting. You think the bond market would react adversely and in meaningful terms to Cook being ruled to have been properly fired?
I do. I mean, we're in an environment where inflation is at a high level and rising, significantly above the central bank's target. And I think if there is a feeling that there's going to be a watering down of that independence, where the central bank may act to stimulate growth and have less worries or less focus on inflation, yes, I think bond yields would move higher as a result of that.
Okay, so look, I think the outcome of that specific Supreme Court ruling probably won't have the ramifications that you worry about. Not that they may not come with future rulings, as the extent of executive power in this space is really tested. But I suspect it'll be, any judgment will be calibrated extremely carefully. And what we've seen so far is I think, remarkably sanguine markets that, your friends in the financial markets are more comfortable with their Trump reading than perhaps we are. But anyway, we'll see. When we next speak, we can find out who was right then.
Absolutely. And we will be back very soon. In the meantime, please do like and subscribe. And as we said, we'll be back with you shortly.